Good morning, everyone. My name is Deepak Gangwar, Assistant Professor in JAYOTI VIDHYAPEETH Women's University. And in today's class, we'll talk about wealth tax, what is wealth tax meaning, and what is the significance of wealth tax. In last class, also we talk about wealth tax and how we apply or who gives wealth tax. So all things we have discussed in last class. So in today's class also I'll tell you what is the meaning of wealth tax, what is the significance of wealth tax, and what are the exemptions of wealth tax. Okay. So wealth tax is a direct tax with the aim to reduce the inequalities of wealth. It is charged on the net wealth of super rich individuals, companies, and Hindu undivided families. Super rich individuals means like Ambani, Adani, all these things, right? Or Hindu undivided family. They have to give wealth tax. It was abolished and replaced with 2% additional surcharge levy. So introduced in late 1950s, wealth tax is a levy of tax on the net wealth and the aggregate value of assets minus the aggregate value of debts or liability as on the valuation date. So, of super rich individuals or HUF companies at the end of fiscal year. Wealth tax was essentially aimed to taxing the super rich taxpayers who both by inheritance or own their own accumulated wealth and therefore had to make a larger contribution to the exchequer and individual under whom Hindu undivided family or company had to pay wealth tax of 1% of earnings of over 30 lakhs. Means persons who are earning more than 30 lakhs in 1 year, they have to pay 1% wealth tax on their income. So, what is the significance of wealth tax? The India reportedly has around 800 million people in poverty. Wealth tax has been a politically sensitive subject and therefore often figures a pro-poor and pro-industry native in the country. Many political parties have in the past demanded wealth tax rates to be raised to 3% reportedly, make several urban and rural cooperatives pay more taxes. Also according to experts, wealth tax holds special significance in India. What with the growing number of billionaires in the country, owing to several factors including booming entrepreneurship and foreign direct investment in specific sector among others. So that was the meaning and significance of wealth tax. Now, now we'll see what are wealth tax exemptions. Investment securities, share, bonds, unit or mutual funds, units of gold deposit schemes, household plots of area below 500 square meters, house as place of business profession, residential properties rented out 300 days or more in a year, vehicles for hire, stock and trade business asset. So now how to calculate wealth tax in India? Wealth tax was calculated on the market value of all assets owed, irrespective of whether they yield any returns or not. All native individuals and Hindu undivided family with net wealth above 30 lakhs were required to pay wealth tax. Wealth tax was based on the valuation of assets as on 31st March and would therefore be applicable on any assets acquired at the end of the financial year. However, assets sold during the year would not come under the preview of wealth tax. Significantly, some double taxation avoidance agreement in the country provided relief to taxpayers for wealth tax if they had already paid in any other country. So wealth tax was calculated as 1% on net worth above 30 lakhs. Example, if your net wealth is 50 lakhs, wealth tax should be charged 1% on 20 lakhs and 50 lakh minus 30 lakh amount will be 20,000. So wealth tax return How file a wealth tax return is equal to e-filing versus wealth tax return form. So its TVDT had in 2014 made it mandatory for wealth tax returns to be filed online. Okay, that is called e-filing or wealth tax returns, effective from 2014-15. The form would be filled and submitted using the digital signature. This, however, would not apply to those who are not liable to be audited. Such person could be returns on wealth tax through the traditional means, that is through paperwork. So now we'll see how to calculate wealth tax. All individuals of Hindu undivided family with net wealth of 30 lakh were required to pay wealth tax. This means if total income of net wealth is 50 lakhs, so you have to pay tax of 20,000. Okay, this we have already seen. Now we'll talk about uh, wealth tax exemptions. So this comprises of assets which are exempted from the list. So a particular house or part of a house or plot of land not exceeding 50,000 500 square meters in case of individual or HUF. The interest of a person in the uh, property of any HUF of which he is a member of the house as a place of business or profession. Any property held by the taxpayer under trust or the legal obligation for any public purpose of charitable or religious nature in India. Jewelry in possession of a former ruler of a princely state, not being his personal property, which has been recognized by the central government as a heirloom before 1/4/1957 or by the CVDT after 1/4/1957. Then certain assets belonging to a person of Indian origin or Indian citizen wife was residing abroad and now returning with an intention of permanently residing in India, exempt subject to certain conditions as per the law. To investment in securities in the form of shares, bonds, units of mutual funds, and units of gold deposit schemes. So now we'll see uh, what are the penalties of offenses and penalties of wealth tax. So if a person gets late for the payment of wealth tax, then the penalty of 1% interest for every month of delay will be charged. Non-payment of wealth tax, it will lead to tax recovery process at the due which has actual amount is pending. That will be increased up to 5 times, and in extreme cases the defaulter may also be imprisoned. So case law, I'll tell you what happened. Some case law, Apollo Tires Limited and the Assistant Commissioner of Kochi number, and that case is 197 of 2009. Here the High Court of Kerala held the SSC constantly completed the construction of the four-story building with basement and started adopting within 2 years of the valuation date. The SSC never thought that the construction of four-story building will complete within 2 years, which is given an explanation under the Wealth Tax Act. Keeping in mind in the immunity available to productive assets, we feel there is no particular scope for collecting the tax during the period of construction of the productive asset, namely commercial building, by utilizing the urban land. In other words, once the non-productive assets like urban land are converted into a productive asset, like a building which will be qualify for the exemption, then the SSC can start getting immunity even during the period of changing the non-productive asset to productive asset. So this was the case. Second case, if we talk about, then Honorable Punjab and Haryana High Court in the case of Siddhartha Enterprises 332 ITR 82 referred to judgment of the Supreme Court case in the following, that is a United Union of India versus Dharmendra Textile Processors of 2008. Supreme Court cannot be lead um, as lying down that in every cases when a detail of income is wrong, the penalty must follow. What was being laid down in that the main difference between criminal liability under Section 276C of the Income Tax Act and the penalty under Section 271(1)(c) of the Income Tax Act had to be kept in sense and arrive at the trial of the criminal case, but not need to be adopted while going for the cases or levying or penalty. Even so, the concept of penalty has not undergone change by the quality of the said judgment. The penalty is imposed only when there is some element of emotional default, international default, not a small mistake. The being the position, the conclusion having been recorded on facts that the provision of wrong particulars was simply a mistake and not a deliberately attempt to avoid the tax. The view taken by the tribunal cannot be held to difficult. So these were the two cases which we have discussed. I hope you understood the session. Now you have a clear clarity of what is wealth tax, what are the assumptions of wealth tax, who gives wealth tax, and what is the tax rate of wealth tax. And we have discussed some cases also. So that's all for the wealth tax act. Wealth tax. In next classes, we'll see sales tax. What is sales tax and what is significant and to whom uh, we have to pay sales tax. All these things we'll see in next class. So I hope you understood the session. If you like this video, please share it with your friends. If you have any type of doubts, you can ask me in next class. So I'll definitely clarify all doubts. Thank you very much. Have a nice day.